Hey everyone. In this video, we'll be fact-checking one of the most popular crypto influencers, Benjamin Cowen. He's got over 800k subscribers on YouTube, almost 900k followers on X, and is widely regarded as a great analyst. But are his predictions really as accurate as they seem? I've done the research, pulled the data, and even made a detailed spreadsheet you can verify on your own. Now, let's address the elephant in the room. Why should you listen to me? You have no reason to. Well, I have been in the crypto space for 7 years now and have followed Ben since he started his channel. I'm not a YouTuber, and this is likely the only video I'll ever make. You've never heard of me, and you likely never will again. But here's the thing, it doesn't matter who I am. It isn't about me, it's about the data. In this video, I'll walk you through the table I've put together. It's got a list of Ben's predictions, links to the original videos with timestamps, the conditions by which we judge if it panned out, and the actual outcomes. You'll see everything as we go, and you don't have to take my word for anything. You can follow the data and decide for yourself. I'm making this video because there is something that bothers me when people rewrite history. They claim one thing, and as time goes on, they tweak their initial statement slowly and steadily until it reaches what the market actually does. And then they claim they were saying it would happen all along. Well, that won't be the case here. I have the receipts. We'll hear exact statements and compare them to what actually happened. I know this video is going to end up being long, so here's a little preview of what's coming. Let's start with one of Ben's Bitcoin calls.
What could mark the next low for the secondary scare? It might just be on the first rate cut. Remember, we're in a period of high inflation. And so the market is going to be so starved for liquidity because the Fed has been so much more aggressive than they have been in the last 40 years that on the very first rate cut, that might be the bottom for Bitcoin. And it could be a higher low, it could be a lower low, it could be a double bottom.
All right, we have the Bitcoin USD chart here. Let's overlay the US interest rate as well. And let's mark the first rate cut, which happened right here. And let's check if Bitcoin bottom on the first rate cut. It didn't quite happen, did it? Well, stick around and we'll dig into this and much, much more. But before we begin, I need to address one thing. If you're watching this video, you'll probably belong to one of two camps. You either think that Benjamin Cowen's analysis is great, or you absolutely despise the guy and you want to watch a takedown video or something. I'm sorry to disappoint both sides. While this video will debunk many claims and predictions Ben made, it will be done in a respectable and academic-like tone. Heavy on the data, light on opinions. So anyone hoping that Ben will be owned and or insulted, this isn't the video for you. On the other hand, if you believe that his analysis and predictions are largely correct, well, I hope this video will give you food for thought. While Ben presents his content in a way to showcase his correct predictions, when you apply some scrutiny, like we will now, you'll see that the majority of them didn't really pan out. By the way, you will notice that all of the predictions analyzed in this video have been made in 2023. So no, while we're definitely not talking about the lengthening cycles theory that Ben had for the previous cycle. You may say that I'm cherry picking, but that's not the reason I scrutinize just 2023 claims. Most of his predictions takes months or even years to verify. So I decided to cut off new entries at the end of 2023 and focus only on those that we can fully evaluate. And lastly, before we dive into the predictions, let's give credit where it's due. Ben, unlike many crypto people on YouTube or X, doesn't shill altcoins, nor does he promote leverage trading that will most likely get you wrecked. And his views on Bitcoin dominance have been mostly correct. Notice that I say mostly, and this is very much intentional. Every prediction has to have a time and a value component, right? Otherwise, it's not really a prediction, is it? I mean, anyone can say it's going to rain, but if they don't give you a time frame, it's kind of meaningless. Are you going to carry an umbrella every day? It will rain on a certain day, but without a time range, predictions like that mean nothing. So this will be important later on, but for now, let's start with the analysis of Ben's predictions regarding altcoins. In the first clip we'll play, Ben is talking about total 3, which are altcoins excluding Ethereum, and how his suspicion is that they bottom either in Q4 of 2023 or Q1 of 2024. Have a listen.
My suspicion is that the altcoin market likely bottoms out sometime in Q4 or Q1.
All right, let's check the charts. So we have total 3 open, and I guess if altcoins were to bottom out in that time frame, somebody forgot to tell them. Total 3 actually bottomed in Q1 of 2023, well before Ben's expected range. So not only was this wrong, but altcoins actually started a parabolic trend during the very period he thought that it would be hitting new lows. Not only was that wrong, it was actually the opposite of correct. All right, let's keep going with a clip from the same video where Ben tied the altcoin bottom to a recession.
What marked the bottom for alts? What marked the bottom? Was it Bitcoin's bottom? No. Bitcoin bottomed in 2018. Alts didn't bottom collectively until 2020. When did alts bottom? When the recession hit. When the unemployment rate started to go up. Why did alts bottom there? Because we started printing, right? You can overlay, again, net liquidity to total 3. Remember, altcoins need liquidity. That's what they need. If you follow this model, you can see that alts have been following it pretty closely. They are a function of excess liquidity, mostly. And so the reason why you could see alts bottoming out as we go into a recession is because upon a recession, there's a good chance that the Fed will pivot and start printing again.
All right, let's take a look at total 3. That's the same chart that he had open. It gets rid of all this stuff. So here's the problem. No recession has happened, and altcoins bottomed well before any kind of liquidity injection. So this wasn't just wrong, it was doubly wrong. And before anyone says, well, a recession might still happen, remember, a prediction without a time component isn't really a prediction. So this one didn't pan out. Moving on, let's see what else Ben has to say about altcoin lows on their USD pairs.
That would likely mark the depression phase of the cycle. And that is probably, somewhere over here. It could easily be where altcoins find their lows on their USD pairs. The ones that are at least going to survive for the next cycle, somewhere in this depression phase over here. And it could occur as late as early 2024.
Again, the descending triangle pattern never played out, and there was no bottom below the one already made by that time, and it especially didn't drop to around a 200 billion market cap where his mouse was hovering in the video. So the value was wrong, and the time was wrong too, because it didn't happen by Q1 of 2024 as he said. So if you continue playing the video, you'll hear stuff about the recession and how the alts would bottom up on the yield curve version. For anyone unfamiliar, reversion is the same as uninversion. I just haven't heard anyone serious use uninversion, so I'll just stick to the more standard one.
If you think that's too long, just remember last cycle, alts did not bottom out until 2 months before the halving in a very brief recession. And again, we have an inverted yield curve. Good chance the altcoin market does not bottom out until around yield curve uninversion or maybe slightly after. And so, yes, I think ultimately that is the direction that we're likely heading. Getting into a depression phase in the altcoin market.
I'll show the current chart again just for completeness, but again, alts didn't have a depression phase and they went parabolic. Let's see what Ben had to say about specific altcoins. So Solana has been doing great this cycle, and let's see if Ben called that one too.
Look at Solana's Bitcoin valuation. Look at it. Has there really been any great reason to be that interested in this altcoin? Has there? Just one lower high after another. We'll see if it holds these lows in a Bitcoin USD downtrend, but there's no guarantee.
Okay, so Ben predicted Solana would revisit its low on its Bitcoin pair, and we should wait and see to see if it holds. So let's see, the chart that had the same one open up heated. Oh, it's not just that SOLBTC never dropped to that level. It actually made, let's check since the video, over a 300% gain since that video was posted. So I think it's safe to say that this one missed the mark completely. All right, that was enough about altcoins. Let's shift to Ben's favorite topic, Bitcoin dominance. Whenever he's claimed that Bitcoin dominance will reach 60%, I'm sure you do, but let's hear it from Ben himself.
I'm looking for an initial move by dominance to around that 56% level. And then from there, I think it will break higher.
As we can see from the chart right now, around 1 year after Ben and May got a prediction, Bitcoin not only reached, but even surpassed the 60% target. At a first glance, this looks like a win. But like we mentioned in the beginning, predictions is not more than just being right eventually. Timing matters. So let's keep watching his video.
At gold on this chart, if we overlay gold, you can see that there was a similar sort of breakout here in June of 2019, right? And now you can kind of see the same thing is going on right here. It's almost identical, in fact, right? Like gold had a top and then had a lower high, and then it broke out right over here. It had a top, and then there's these lower highs in here, right? You kind of get these in higher highs going into it, right? I mean, it's a really similar pattern, in fact. But then now it's potentially breaking out, which is arguably right here. And the reason why that's interesting is because that might kick us into the final stage of the Bitcoin dominance rally, right? Where the dominance goes up, you know, for another 4 weeks, maybe 8 weeks. I don't really know, maybe 12, I don't know.
Okay, so we've heard the comparison between the gold breaking out, something that you references quite frequently. But notice that the original prediction was made in December of 2023. So I had it on the chart right here. And that you said that the dominance rally would take anywhere from 4 to 12 weeks. So the time part has been set to February of 2024. And if we look at the chart, by Feb of 2024, we didn't even reach 56%. So it was nowhere close to 60%. But let's continue, since this isn't an isolated thing and something if he never repeated ever again.
So what if Bitcoin were to do the same thing where it finds some type of a top in December, and then in January, we have all the hype surrounding the spot ETF, but it doesn't take out the December high, but dominance goes up to 60%. I wouldn't be surprised to see something like that play out, where dominance goes to 60%.
So here we have a chart of Bitcoin USD in candles and Bitcoin dominance in the line chart. And again, then claims that Bitcoin itself might peak around the center of 2023 with the hype about the ETF launched in January of 2024, which would lead to Bitcoin dominance rising to 60%. But as we can see, it didn't actually happen. It didn't happen in the time frame suggested, but if we look at dominance itself, it actually did go up to 60%. So we do rate this prediction as partially correct, because the magnitude of the move was correct, but the timing wasn't. So let's continue with founding inspirations.
And so then I look at this chart and I say, well, why can't it go higher? I mean, in both of these cases over here, we saw dominance sort of slowly trend back up into the end of the year. December tends to be a time when Bitcoin is a little bit, shows relative outperformance with respect to the altcoin market on average. So why shouldn't I assume that dominance can't go up?
So this may not be the best quote of what Ben is trying to convey, but his thesis was that Bitcoin dominance would rise in December of 2023 compared to November of 2023. However, if we fire up the dominance chart on the monthly, we can see by the yellow arrows that his prediction didn't really play out. So let's take a look at another clip from the same video.
My best guess for dominance, my best guess, which is subject to change because markets are always changing, right? My best guess, though, is that it rallies for the rest of the year. Occasional pullbacks maybe, but it rallies for the rest of the year and could start to form that topping process over the next few months.
So this confirms that he believed that Bitcoin dominance would rise in December, and then added a statement that it would top in the next few months. However, when we look at the charts, we can see that it didn't top back then. It went completely sideways. In fact, it's in the process of topping out or still rising right now. So this prediction also didn't pan out. In another video, Ben talks about Bitcoin dominance again. Let's hear what he has to say.
It could backtest. It could spend a little bit of time in this 49 to 50% level, but I think that we will see it much higher by the end of the year.
So in September of 2023, it's marked with the arrow right here. When Ben published the video, he talked about Bitcoin dominance being stuck in this 49 to 50% range. But he also said that it would end the year much higher. So I don't know about your definitions, but I don't know. It's going from 50% to 51.5%. So it really depends on how you define much higher. But in my book, a change from 50% to 51.6%. It doesn't really satisfy the criteria of much higher. So I labeled this one as not panning out, but I will let you decide for yourself. Now, let's move on. In this clip, Ben is talking about the relationship between the Fed cutting rates and Bitcoin dominance.
This continues to be the main thing. The dominance of Bitcoin, I think, can still go up. right? And I mean, again, it did not top out last cycle until we started to get rate cuts.
All right, so we have Bitcoin dominance here as a bar chart and US interest rate as a yellow line chart. And indeed, this one is correct. So Bitcoin dominance did not stop until we saw rate cuts, and it even continued to rise after the initial cuts. So I really can't argue with this one. It ended up being correct. However, you know the saying, never interrupt your enemy when he's making a mistake. So we'll let Ben continue talking.
And we haven't even seen a rate cut yet, and we're likely not going to see a rate cut until the S&P sees some type of a significant sell-off.
Ouch. So here we have the S&P in a bar chart and the US interest rate in a yellow line. And we can see that not only there wasn't any kind of a significant sell-off in the S&P, but it's literally making all new time highs. So since the video dropped, we rallied almost 47%. So we've had rate cuts without any sort of a significant sell-off in the S&P, which is the opposite of what Ben has forecasted. So I think we'll have to label this one as didn't pan out. And while we're on the subject of the S&P 500, Ben suggested it might drop all the way to 3,300 within a year. Let's take a look at the clip.
Look at this chart, and I think that I'm still of the camp that a lower low could come for the S&P 500, and the reason why I think it's a possibility, it's not like a sure thing. There's no such thing as a sure thing with investing, but I think the reason why it's a possibility that we all should consider is because recessions are notorious for taking. That's what happens in a recession, is we put in a new low, with stocks. So if that were to happen, I think that it wouldn't be that surprising. And we've talked before about like sort of that pre-pandemic high as being a potential target, 3,300, 3,400, if something like this were to play out. And who knows how long it takes to play out. Maybe it takes a year.
Okay, so this is the S&P, and where is it now? It's currently at around 6K. The pre-pandemic high wasn't touched. We didn't have a recession, so this prediction clearly did not pan out. It is worth noting that Ben did hedge this one with a lot of caveats, but the main idea still didn't hold up. Let's move on. Next up, there was a claim in 2023 that Bitcoin would spend half the year going up and half the year going down, wrecking both the bears and the bulls, as Ben has said. Let's confirm this.
In the pre-halving years, it was 6 and 6 or 7 and 5. And so I think this year is likely going to be either 6 and 6 or 7 and 5 or 5 and 7.
So here Ben was talking about the green and red months being distributed either equally, like 6 and 6, or plus minus 1, meaning 5 green ones and 7 red ones, or 7 green ones and 5 red ones. And that's all for 2023. So we will look at the data and we actually count the months. You can see that we had only 3 red months in 2023, meaning we had 9 green ones, making his call inaccurate. So we're saying this one did not pan out. Now it's time for more serious stuff. This is taken from the same video, and listen to what Ben has to say about Bitcoin.
What could mark the next low for the secondary scare? It might just be on the first rate cut. Remember, we're in a period of high inflation. And so the market is going to be so starved for liquidity because the Fed has been so much more aggressive than they have been in the last 40 years that on the very first rate cut, that might be the bottom for Bitcoin. And it could be a higher low, it could be a lower low, it could be a double bottom. It all depends on how aggressive the Fed wants to be.
Well, you've heard this right. Bitcoin might bottom on the first rate cut by the Fed. Now, we know that the first cut happened in September of 2024, as marked by this vertical line. And the price back then was not close to the bottom. In fact, if we calculate move from the bottom, it was around 300% off the bottom. And if we're a bit more generous and check from the time when Ben published the video, it's more than double that price. So we need to mark this as another miss for Ben and not panning out. And now that we've looked at Bitcoin price predictions, let's shift to Ethereum and examine how those predictions played out. Ben predicted Ethereum would end 2023 somewhere between 0.03 and 0.04 on its Bitcoin pair. Here's the clip.
Are both red for 2023 and 2022. And note that in 2019, the close was below the wick of 2018. So if in 2023, the close for Ether Bitcoin is below the wick in 2022, then it means that Ether Bitcoin could close the year below 0.049. Last cycle, we closed the year about 28%, 27% below this wick. 27% below that wick today would put Ether Bitcoin, coincidentally, at 0.036. And I've said many times, I think the Ether Bitcoin valuation is going to that 0.03 to 0.04 range.
So did Ethereum close the year in that range? Let's check the charts. I have the same yearly charts open that Ben used. And if we look at the 2023 candle, we can see that the wick did not close below the 2023 wick. It closed the year at 0.054 around. So that's pretty far away from his prediction. Now, Ethereum Bitcoin did get to that level in the end. So we can see in 2024, it's currently actually right there. But that is a delay of 1 year. Now, remember, timing matters. Predictions that don't hit their time targets, they don't really count. So this isn't nitpicking, it's being technically correct, which according to Ben himself is the best way to be correct. So just because this one has been partially correct but did not meet its time goal, it also goes into the didn't pan out column. Let's keep going. There's only a few left. Let's talk about Ethereum dominance. Ben predicted it would drop all the way down to 9%. Here's the clip of what he said.
My guess is this is coming way back down here. It's my guess.
This one is also very easy to check, so we just fire up the Ethereum dominance chart, and I've put all the lines that Ben had in his video. And Ben was showing Ethereum dominance hitting 9% at this point in October of 2024. But just looking at the chart, we can see it's pretty far off that point. It's around 13.3%. So it's pretty far off. Now, it still might fall this level, but like I mentioned, every prediction has to have a time component, and the time component failed in this case. The value is way above his prediction, so we need to mark this one as didn't pan out as well. So let's continue with another Ethereum prediction, this time about its Bitcoin value at the end of the year. I guess we looked at this prediction as a part of one of the previous statements we looked at, but let's just look at it isolated.
This again many times, that the Ethereum Bitcoin valuation will likely close below the wick of 2022. Now, the wick in 2022 was 0.049. We're currently at 0.057. So I'm saying I think there's a good chance that Ethereum's Bitcoin valuation closes below this wick, meaning it closes below 0.049.
So we fired up the Ethereum Bitcoin chart again and have the 2022 candle right here. The 2023 candle is this one. And again, did this happen? No, it closed above the wick of the 2022 candle at around 0.054. So you might say that this is nitpicky, and I somewhat agree, but this was one of the rare precise statements that Ben shared. So I guess I wrote it down in my spreadsheet to check later on, just because it's easy. Did it pan out? No. Next. In the same video, Ben shares one of his most controversial predictions. Yeah, I'm talking about Ethereum going home. Let's hear what he has to say.
What you'll notice is that every time Ethereum made a rally to new highs, it did not happen until Ethereum went home first. Home is the lower regression band, right? Go home, new highs. Go home, new highs. Go home, new highs. Still got to see ETH go home, my friends, and it hasn't happened yet. So I think that it will.
Notice the certainty here that it has to go home and that it hasn't happened yet. Now, I don't have access to the Ethereum wallet regression plan indicator that he used, but just by looking at the price, we can see that Ethereum never went there. I think Ben was showing a region that would be around here, but Ethereum never went below 1K, and currently it's at 3.7K. So I think this one can be counted as a wrong prediction. Ben himself confirmed so in a recent video. So I'm marking this one as a didn't pan out. So what's the final tally? Out of 17 predictions we reviewed, 15 were wrong. One was partially correct, and only one was fully accurate. That's not just a poor track record, it's a failure by any reasonable standard. It's like trying to play darts blindfolded. You might hit the board eventually, but let's not act like it was skill. Most of these predictions missed either their time component, their value component, or most of them both. Now, to Ben's credit, he doesn't shill sketchy altcoins or promote reckless leverage trading. which is more than can be said for many in the crypto space. And yes, his insights on Bitcoin dominance have value if you squint your eyes a little. But when it comes to broader predictions, his track record is far from reliable. This isn't about taking cheap shots, it's about being honest. If someone gets 15 out of 17 calls wrong, you have to ask yourself, is this advice worth following? It's not a personal attack, it's a reality check. The crypto market is chaotic and no one gets it right every time. But if you're basing decisions on this kind of a track record, you might want to reconsider. And I'm sorry to end this video on a negative note, but in my opinion, Ben's analysis mostly boils down to, oh, this thing happened once or twice before, so it's likely going to happen again. I mean, some things are generally true, like holds bleed to Bitcoin until Bitcoin goes parabolic when there is excess liquidity, but you don't need Ben to tell you this, it's widely known. The specific predictions he made, the ones that aren't generally considered as common sense, I hope that during the duration of this video, I've shown you that he has a very poor, or as we in the academic circles would say, suboptimal track record. The data doesn't lie, and I've made sure you can see it all for yourself. The spreadsheet with every timestamp and link is in the description. Thanks for watching, and as always, stay informed.